Alright, y'all bear with me for just a second, making sure I get this. It's going to be a really quick pre-market TA session. Hold on. Oops, look, just one more time. Let me jump over the charts. I know people are tripping over Bitcoin right now, so I'm going to glance at that real quick. So Bitcoin's looking great, which is something we have been watching for months and what I've been kind of conveying to keep an eye on. Opposed to broader big tech and ETFs and lots of other things right now, Bitcoin's been rocking, and Bitcoin's remained in a very bullish structure on the larger time frame, right? So looking at the weekly here, and sorry, there's lots of lines right there, but we've been scalping some other stuff too with futures, so I'm leaving it. But from a broader standpoint, Bitcoin's not like big tech where it's broken and lost its larger time frame uptrends. Bitcoin and most of crypto actually has maintained a bullish structure on larger time frames. Let me move this over here on my other screen so I can see any tickers that people are requesting. Feel free to throw them in the chat and everything else. Hey Moonlight, what's up? So what we got going on with big tech and ETFs and all that stuff right now, right? We look here, and we're still in pre-market, which we did get some retracement in pre-market, but don't get deceived and overly bullish with the retracement. Retracement is healthy. This is also why I was kind of patiently waiting yesterday and didn't enter a lot of new trades. When you look at, and again, sorry for all the extra lines. If you need to know what the lines indicate or what they mean, look at the legend that is there in the description for the video, and it'll kind of walk through what they are. But you look at QQQ, you look at SPY, you look at most of these big tech tickers, they're all very much still in a technical downtrend at the moment. So what we're seeing is retracement bounces and then rejecting the key levels, and we continue to form lower highs and lower lows as we're going through this on the daily and weekly time frame. Good opportunities on certain things to trade or enter puts maybe on some of these, but then also in a lot of them, you have to weigh the risk to reward. And I know that some of y'all have heard me say that many times, but you won't see me personally swinging options, whether it's calls or puts, on stuff like SPY or QQQ for a month or two out, or even further. And the reason being is because we have such elevated IV on a lot of these things right now that basically if we were to trade range bound for maybe a week or two, the premiums are going to tank even if the stock or the ETF continues to move in the direction that you need for your contract. So that's why it's a little bit more dangerous to actually swing options on many of the things like SPY and QQQ right now. And why you see me, even though we're in a technical downtrend, you don't see me jumping in SPY puts for like June, July, September, stuff like that, like I might do for other tickers. Those can be okay to hedge your positions potentially, but overall for me, risk to reward's not worth it for the price of those contracts that you're going to pay, and for the risk to premium decay that's going to occur on those. It's just not there. So definitely keep an eye on a lot of these right now. Like I said, we're still in a technical downtrend on a lot of these. We're actually playing out fresh new bear flag setups that have come into play on a lot of them. if there's any specific tickers y'all want me to go through, just because we are crunched for time, and then I gotta jump on another meeting here in a minute. But any specific tickers you want to see, throw them in the chat, and I'll take a look at them for you. See, main ones that people need to keep an eye on right now, NVIDIA. So NVIDIA, if you want to understand how QQQ and SPY really are moving, you don't look just purely at QQQ and SPY. Rather, look at the top weighted tickers that are actually driving the movement for those ETFs and indices, such as SPX and such, if you want to talk indices instead, or NASDAQ. But NVIDIA, Apple, Microsoft, those three alone drive and have the heaviest weight. Of course, Deej wants to see Tesla. Sorry, looked over and saw that. So I'll glance at Tesla in a second, because I know a lot of people are really focused on Tesla because earnings today, which we all know that earnings could be one way or the other, and I won't advocate people trade calls or puts with earnings for most things, especially Tesla. Actually, calls and puts as a buyer haven't made sense for me to trade on Tesla in months. I've been selling the crap out of covered calls alternatively, but yeah, as a buyer, hasn't really made a lot of sense. The premiums are very much stacked in favor of option sellers at the moment. So looking at NVIDIA though, one thing you want to keep an eye on here is whether or not we bounce and retrace, and ideally we would have filled here. I'm gonna delete some of this so it's a little bit easier to see. Ideally, I would have liked to have seen, and maybe we still do it today, maybe not, there's a gap right there now where we gapped down between last Thursday and the open yesterday. So we never actually filled that gap at 100.05. However, even with this big pre-market move, which if I open this, you can see NVIDIA's up 1.45% in pre-market. We're still down significantly, and we're not even back up to where we opened yesterday yet. So keep an eye on NVIDIA, because it looks like we are continuing downward continuation. Also, you've got strong selling volume that is kind of looks like it's tapering, but in reality, it's kind of ramping back up based off of what we saw here with the price action moving up, and that volume dissipated. So right here, this is actually increasing gradually. It looks like. We'll see what happens today on NVIDIA and if it pushes forward. Personally, even if we're doing downward continuation moves on a lot of these tickers, I prefer to see gaps filled to the upside. When I see a key rejection at a level like that, that's a good entry point for fading the setup and actually trading puts, but it depends on the ticker. Risk to reward, like I always say, has to make sense. So if I look at NVIDIA options, premiums don't make sense, then I won't be trading puts on it regardless of how bearish the setup looks. So it's all about risk to reward. I'm not going to risk $1,000 to gain $100. Like, it's just not going to happen. So I'll look at stuff on a percentage basis. Stevie asked if trading SPY today, what is target? So if I'm looking at SPY for the daily, and I'll pull my TA and I'll post it for y'all for intraday, especially with the SPX and SPY, which this chart probably scares the crap out of people when they see all the lines on it, but it works. So like yesterday, we traded that breakdown. I'm going to delete this because that setup's over with, right? And then just like we were expecting, we saw that retracement bounce right there into close as we had shorts covering positions and taking new positions. So if I look at SPY though, because SPX isn't moving yet, look at SPY in correlation to where it was yesterday. So SPY actually never filled its gap either. If I was to look at it on the daily, there's going to be a gap right there. So it would be cool if it could fill that, but there is no guarantee either. So if I'm looking at levels, Stevie, to your question, I'll look at the daily, and I want to see historically what levels are respected as support and resistance in that range. So when I'm looking at this, I can see there's some support in that zone there because we caught bounces there, right there. We kind of fought over it, and then right here we're testing it again. Resistance, we rejected there, rejected there, rejected there. We finally broke through with some increasing buying volume there. Then we retested again here, retested here, right? So that probably came from the weekly if I went back and looked, but you can see we're actually potentially going to retest that right with that gap fill level, which I'll be curious to see if we have the steam to push up and fill those gaps. I would like to see those gaps filled to the upside. Before anyone asks, will I be trading calls for that? Maybe, but probably not. Risk to reward's probably not going to make sense given that it's such a tight movement range as well. So I don't know. It depends on where we enter and what the trade setup is too, because you'll see me often. I'm not, unless the setup really makes sense, I won't jump in right at open. Like I'll sit, I'll patiently watch for the setup to form. I'll wait for the higher probability trade to present itself, and then I will enter and take the trade. So there's no need to rush and force the trade. Patience actually pays off really well, as y'all have seen with many of the trades recently. So to answer your question, I will see how SPY opens in this range and how it acts after open. But then more importantly, I'll watch Nvidia, Apple, and Microsoft to see how they act after open, because we did invalidate this one little bear flag right here. So I'll go ahead and remove that because we held that 95.40 support. But you want to watch Nvidia as it kind of retraces, especially if it rejects at the same level that it rejected at open yesterday. I'll go ahead and put a minor resistance level right there just to keep an eye on. If you see volume falls off hard as it tags that level and we reject on the 5 and 15 minute, Nvidia is probably going to reject and move lower. But then this right here is the 1 hour candles, just in case anyone's like, what is that thing floating over there? And that is this PO3 exo trades indicator. I just like it because when I'm looking at the 5 or the 15 minute candles, I don't have to switch between time frames to see what the 1 hour is doing. And I like to look for confirmations on the 1 hour when I'm trading intraday for day trades or scalping. For instance, if I saw that a reversal was occurring here with a rejection on the 1 hour, and we're also seeing a potential reversal take place on the 5 and 15 minute, once I have the confirmation on the 5, 15 minute, and potentially 1 hour, I might enter puts on something. So watching this for Nvidia, Apple, Microsoft are the main ones, several others. Yeah, y'all are throwing all kinds of tickers over here in the chat to look at. So I can try to look at a couple. Then I will post detailed TA for y'all while taking a couple of meetings. So VIX, Stevie, you're asking about VIX. So VIX is going to do one of these things. Like what I would watch for on VIX is when it bounces off that $30 range. Basically $30 plus, you can expect some major volatility to remain on SPX and SPY. We'll see what VIX does after open, but once it drops down to, somebody posted like a kind of fundamental approach to look at it, and I actually kind of dug it yesterday, or maybe it was this weekend, but basically showing that when VIX is over like $30, you can expect like 2% movement for SPX and SPY for the given day, which I wouldn't use as a hard and fast rule because we all know how news can drive trading nowadays and events can drive trading, but ultimately, it was kind of a good sentiment indication to look at that if VIX is over a certain amount, then you can expect higher volatility, which hard to see. Those numbers are ethical. Yeah, so make sure on your YouTube that you have the little thing set to playback quality, 1080p high definition. Because I can see the numbers on my other screen that I've got open, which I can make this smaller and zoom on in for you. But basically, like, I'm not trading VIX options directly. I have in the past. I won't nowadays just because I've realized that risk to reward doesn't really make a lot of sense because the premiums don't move nearly as much as what you would think they would on VIX options, which VIX basically, I don't know if y'all are aware, but it is a measurement basically for SPX options. So yeah, I can't use the indicator. It's fine. Walmart real quick because you're asking. So Walmart, I'm watching this setup right now because Walmart's trying to hold the range and break out to the upside. That being said, it's also formed a potential head and shoulders here in the setup range. So I will post the detailed TA and technical analysis for that so that you can actually dig in a bit deeper and I'm not rushing through it. Gold. So I posted the futures breakdown, but that's going to be very comparable to this. Gold's in a very strong bullish trend across multiple time frames right now. So with increased uncertainty, you're going to probably see gold to continue to move to the upside. I'm not trading it a lot at the moment just because for me, capital wise, I'm trading other stuff. But if someone wants diversity with commodities, it's not a bad thing to trade. So Palantir. So Palantir's also got a potential head and shoulders going on here, but I'm also remaining in my shares because my average is way down there at 1711. And there is, like I say on a lot of the charts, there's a bullish and bearish patterns in play. It's more about watching what is going to confirm and actually follow through with its trading. So we actually broke out of the downtrend here. We formed a higher high, which is the technical aspect of a downtrend breakout that I always tell y'all that I'm looking for. That doesn't mean that we're guaranteed to rocket higher, but that's a lot better than looking at something that just pokes above a line and doesn't actually form a higher high. Yeah, I can tag the VIX right up for you, Stevie. Like, just be careful. I don't know if you're trying to trade options on VIX or if you're wanting to trade shares on VIX, but VIX is used more for indication purposes by most and maybe a hedging instrument, not so much to trade directly. Not saying you can't make gains on it, trading it directly. It's just for me, it doesn't make a lot of sense to trade VIX by itself, at least buying in the current range. And I know a lot of people are like, oh, well, eventually the markets will stabilize, so I'm going to buy VIX puts, a year or two out. Those premiums are probably going to get wrecked as the IV decays, or as the IV decays the premium. So just something to keep in mind. Just because something ripped high doesn't mean that buying puts means you're going to make gains. It's just the nature of how the Greeks work. Let's see. Uber was the other one on the list. So Uber is also trying to push higher, it looks like, but we have failed to make a higher high yet. So as of right now, still maintaining there. On the weekly, though, Uber looks like it's consolidating in this range. And it's got a head and shoulders here, but it also has a bull flag here. So again, watching to see which of those patterns plays out. There's also inverse head and shoulders there. So keep an eye on all those setups because any of them could actually confirm and play out. TJX. Man, that's a strong technical uptrend on the daily, but I'll pull the technical analysis for you after I draw the lines on it. Throw that in the chart request folder for me, Stevie, so don't forget. Other tickers. And sorry, for those that are just joining for the first time, these live TA sessions aren't usually this chaotic and fast-paced and kind of throwing stuff around. Usually they're a lot more intentional and kind of slowly walking through different technical structures that are going on. But I've got to jump on a meeting here in a minute, so I just jumped in here really quickly to walk through a few of them that were being requested based off the chat. Let me check real quick. Yeah, somebody was asking about the ES play overnight. Yep. I was going to trade it to the upside and missed my entry. Otherwise, I would have made some huge gains on the futures trades again. But yeah, I will, once market opens here in a minute, we'll see how things play out. I'll pull my SPX chart once we see where we open. And then we'll trade it accordingly. Some of y'all saw I reset that Robinhood account back to about $2,200. So looking to see what we can do with that one today as well. Also got some futures trades going on over here. If I'm my futures window. And ES is tempting me to take a long right now. Maybe one day I'll do live futures trading for some of y'all because y'all keep asking. But in the meantime, use those trading plans I keep posting for futures trades because they're actually really, really accurate, oddly enough. So I have faith in the AI model that I built out. Also, if you ever want to really hold yourself accountable and get better at your charting and such, take any of your charting that you've got, feed it into AI and tell it to point out any and all flaws and where you could be wrong. And it'll be very revealing. You have to be able to take criticism and feedback if you're going to do it, but it's helped me to be a much better trader. Also, fun fact, one thing you can do is you can ask it based off anything analysis-wise that you just gave me, what's your percentage of accuracy that you expect based off what was provided, and it will actually tell you. So I've got most of my models trained to the point that they give me accuracy within 95% confidence, so that is good, and that's why a lot of those charts and stuff you're seeing play out based off the plans are working really well. To answer a question I've got asked 4 times the last 2 days, I draw the lines on my charts. I do not use any kind of tool or indicator to draw the lines. So that is something that the more you do it, the more you practice, the better you'll get at it. I do it a lot and have done it for like 5 or 6 years now. So that's why they seem to be more accurate. But just give yourself grace and patience. You'll get better at it as time goes. AMD. So yeah, AMD, McRidge, real quick, let me look at that for you. So AMD is one that I've been so long, for months, and people are probably tired of hearing this by now. I've been patiently waiting to go long on AMD because we have remained in a strong technical downtrend on AMD for months. I've been patiently waiting for a higher high to form because I'm okay with paying a few bucks more per share to have the confirmation and the confidence that we are in a true reversal as compared to buying AMD shares or long calls here just to form a new lower low and to, drop even more when I could patiently wait. Maybe I'll pay a few bucks more per share. I'm okay with that. I'd rather do that than be down, 15, 20% or more, which would mean I could have bought, hundreds of more shares potentially for the amount of capital I would have spent had I went in right now. And that's kind of why I'm not a big fan of just purely telling people to dollar cost average and just keep on buying as things dip. Because when you actually look at it, if you were to take that same amount of capital and you were to enter at, I think when we looked at this on AMD, like if we were entering at like the 116 range when people were trying to buy back then, talking about a reversal because we broke out of that short-term downtrend on the line, but we didn't form a higher high. If you were to look at buying with capital at that point versus buying with the same amount of capital at this point, it's a huge number of shares difference. So longer term investment wise, if anyone is already in AMD, Nvidia, a lot of other things, I highly recommend people learn how to hedge positions. I forget what the day was. Let me look real quick because I don't want to misspeak to this, but like when I alerted for Nvidia on the 11th to sell covered calls, which look, this is a good example. So Nvidia wasn't all the way at its peak of the current setup. However, I knew I needed to hedge because we're in a retracement bounce. There was a lot of bearish indication going on. There was also a lot of sell to open calls going on by the whales over on the screeners. So on the 11th, I sold new 516, 105 strike calls on my Nvidia shares to hedge them again. And yes, we did open higher the next day. So those calls were temporarily like negative for me as the person that sold. However, from a cost basis standpoint, I wasn't negative. And this is kind of the beauty of covered calls because I collected $1,140 for each of those calls, right? And they were a 105 strike. So worst case scenario, if I basically ended up having to sell my shares and have them exercised on 516 at the 105 per share, if you were to add 105 strike in the 1140 per call, or I'm sorry, 1140 premium, right? So $11.40 per share basically in premium. When you look at that, 105 plus 1140 was at 116.40. So if you actually go look at the chart, even when we popped up higher that next day, I was still net positive on that position because I was below that cost. And if that math is not math, then I apologize because I have not had enough coffee, but I'm pretty sure 105 plus 1140 is 116. So what I could do is if we went higher than that, I could potentially roll out the call to a further date. I didn't have to. I saw the rejection. It was very clear, and then we've tanked ever since. So those calls as of close yesterday, which, yeah, we've retraced some, but that's okay. I'm still hedged, right? So as of close yesterday, those calls were up like 70-something% in my favor, which means that also with this drop, I've been hedged. I haven't taken just a full hit as we pulled back, and rather I could actually choose to buy to close those covered calls at this point and net the premium. Then I could sell more covered calls again. And I'm not saying, yeah, McRidge, you bring up a good point, because people are like, well, I don't have the money to do covered calls and to hedge. If that's the case on some things, like, absolutely, not everyone's going to have 100 plus shares of something to sell covered calls, but there's other ways to hedge, whether that's short-term puts that are delta hedging. Okay, the market just opened, so the fun will begin. And I've got to go join this other meeting in a second, but I want to see where we are. Alright, so SPX got this nice gap up, so I'll watch on the 15 or the 5 and 15 minute to see if we get a reversal here. I'm not gonna, even though I could probably enter puts or something or calls on SPX right here at open, the premiums are whacked. Like, risk to reward, not worth it to me. I'll let the premium settle, and then I'll trade accordingly based off that. Where's NVIDIA? I want to look real quick. Bam, technicals on point, right? So there's your live example if you want one of how well technicals can work. And I'm not saying this definitely rejects here and we move flat out lower. I'm saying that's a rejection at a key critical level that we know it's actually exactly at. Oh, look, shocker. So if there's any other tickers y'all want specific TA on, send them to me. I gotta jump over this meeting now, but hopefully this kind of helped kind of walk through some stuff for y'all. I'll try to do more of the technical sessions like this after market close and stuff this week. Wow, that would have been a good opportunity for somebody that hasn't sold covered calls yet, potentially right open. But also we might actually catch buyer volume. No, that's pretty heavy volume. That's probably going to keep selling. Seeing this is what I was talking about with 5 and 15 minute as of right now, which this is an opening candle, so we'll see what happens. This thing could definitely push higher if buyers step in, but you can see what I was talking about with the rejection on the 5 minute here, and then we're looking at these 1 hour candles. You can see right there it's potentially going to reject and reverse on the 1 hour candle. It's fighting it right now. If it can push higher and it opens or pushes this candle back above, it can push, and that would be kind of a bullish reversal attempt going on with the 1 hour, but as of right now, that's struggling. So it's looking like it's actually going to be a bearish reversal and break to the downside. So I'm going to wrap this one up. Hopefully it was helpful for you guys. If you liked it, hit like and subscribe. If there's any charts or anything y'all want to see TA on, either tag me in the lounge, tell me, or throw it in the chart analysis request channel. That way I can make sure I cover it. But everyone have a good day today. Be patient. I know it's hard. Just be patient and for the right trade setups, and they will come. I'm not saying sit on your hands and don't trade for weeks or months at a time. I know other people have kind of done that and then waited forever to get in. I'm saying look for the proper setups and the confirmations, even for day trades, then enter them and take your gains, right? So lots of opportunity, whether the market's green or red, doesn't matter. So everyone have a good day.